All investment experts I interviewed agree on this. To be a successful investor, you need to rebalance your portfolio at regular intervals. You have to take a look at your buckets and make sure your asset allocations are still in the right ratio. From time to time, a particular part of one of your buckets may grow significantly and disproportionately to the rest of your portfolio and throw you out of balance. Say you started with 60% of your money in your risk growth bucket and 40% of your money in your security bucket. 6 months later, you check your account balances and find out that your risk growth investments have taken off and they no longer represent 60% of your total assets. It's more like 75%, and your security bucket holds only 25% instead of 40%. In such case, you need to rebalance. Rebalancing is a technique that seems simple at first, but it can take a lot of discipline. And unless you remember how important and effective rebalancing is in maximizing your profits and protecting against your losses, you will find yourself getting caught up in the momentum of what seems to be working in the moment. You will be hypnotized into the illusion that your current investment successes will continue forever, or that the current market can go only in one direction, up. This pattern of emotion and psychology is what causes people to stay with an investment too long and end up losing the very gains they were so proud of originally. It takes discipline to sell something when it's still growing and invest that money into something that's down in price or growing more slowly. But this willpower is what makes someone a great investor.